Hello, my name is Jason, and I am starting this document series to record my progression as a funded futures trader with Apex Trader Funding. A little bit about me and my trading history. I've been trading since March of 2021, starting with trading NASDAQ and ES futures. I've tried a few different strategies back when I first started, but found my way to something called the trading network, which will be the foundation of the trading setups and strategies that you'll see throughout this series. Basically, I have had a history of being funded and losing funded accounts with Apex Trader Funding, but currently I am back with 4 different funded Apex Trader Funding 50K funded accounts. And so I wanted to start this YouTube series to document and really for myself try to remain and gain some consistency with my trading. So this is more of about accountability for myself. But if you're watching this, I'm hoping that you can learn something as well as I can learn something and continue to grow as a trader on my own. So I have a new plan of action, hopefully, working within a set of fairly strict trading parameters. Historically, I've had some decent executions on my trades and setups, but it has been more of an emotional journey and working on gaining some consistency, controlling tilt, oversizing just things that I've done in the past that have caused me to blow funded accounts or evaluations. But now hopefully I've turned over a new leaf and wanted to document this plan of action and series for you. So how will I trade? I will be using a few set of indicators and strategies developed by TTN, the trading network, by a guy named Zach Felds. He has developed a few custom indicators such as oscillators, RSX, stochastics. We have some delta indicators that you'll see on the chart, but there are 2 main strategies that I utilize. So in a trending environment, we will see something called the opportunity zone, which is when price is making higher highs, higher lows, for example, on a long move. We will look to buy the pullback through the opportunity zone EMA structure, the 21 and the 50 EMA. The other type of trading strategy that you'll see will be a momentum flip. Normally, we are trading on 2 specific charts, the 377 tick and the 1000 tick, and relying heavily on market profile structure. So you'll see that throughout these videos. But the second type of trading strategy is called momentum flip, or a 3-step shift, where we will look for divergence between price action and an oscillator, looking to see higher highs on price but lower lows on the momentum, and then look to get a higher low which would confirm the change in behavior. You will see some evidence where we are in a very tight ranging structure between different sets of profile levels, and I will occasionally take a momentum flip trade without that extra piece of confirmation, which would be the higher low or the lower high. But in most cases, I am looking at the 377 tick to give me that confirmation of the higher low, with additional confluence on the 1000 tick. Now, when I'm recording my screen, you will probably not be seeing the 1000 tick chart because it is on another part of my 49-inch widescreen monitor, but I will occasionally show that if I can work with my video editing software. I am not very proficient at this, so I'm just trying to take a good swing at it. So we will go through a certain set of procedures every morning. We will do some pre-market planning. We'll review what the TTN trade plan is, confirm that we agree. Zach is normally right. If the one is wrong, it's probably me. But we will look at to see if there's any sentiment shift from the overnight inventory. Have buyers move the market up or sellers move the market down? Are we opening inside range in value or outside range of value? Do we have any gaps in play? Do we expect a trending or ranging market? We will then come over to my 377 tick chart and mark up the profile levels that are of interest that cause price to get a reaction. So these are things normally like overnight highs, overnight lows, prior POCs, naked POCs, which are point of controls, value areas, value area highs, value area lows, and I will normally mark up my 377 tick chart with a line in the sand so that if price moves in holds above this specific level, we can expect to hit the upside targets, and I will normally do between 1 and 5 upside targets those targets being things I just called out, like overnight highs in value areas. Same thing with the downside. If price moves and holds below the line in the sand, I will look to continue to target those downside levels. So I hope this works well for me. This is really kind of my last good swing at it to develop that consistency, hopefully developing that accountability. If I fail at it, I'm sorry, but this is just something that I'm working through, and I hope you can enjoy the journey with me. I appreciate you watching this video. Thank you.